Hello and welcome to my YouTube channel, where I share with you my Forex trading tips and tricks. In this video, I'm going to talk about the differences between the 1 hour Forex time frame and the 15-minute Forex time frame, and how to choose the best one for your trading style. Do not forget to click the like button, subscribe to this channel, and if you're looking for a mentor, click the link in the description section below. And without further ado, let's do this. So the 1 hour Forex time frame shows the overall trend and the direction of the market. It is suitable for traders who do not want to spend too much time looking at the charts. The 1 hour Forex time frame has more reliable signals per trade, but lower trading frequency. It is less affected by market noise and random price movements. However, it does require a wider stop loss, which can slightly reduce the size of your profits. So the 15-minute Forex time frame shows the short-term fluctuations and noise of the market. It is suitable for day traders and scalpers who hold trades for minutes or hours. The 15-minute Forex time frame has higher profit potential per trade, but that comes with a higher trading frequency. It is more affected by market noise and random price movements. It requires a tighter stop loss, which can lead to bigger profits. So right now we are going to analyze Euro USD. This example happened on the 24th of April 2023. On the left, we have the 15-minute time frame, and on the right, we have the 1 hour time frame. So in this video, I'm not really going to go into the strategy. All we are doing is comparing the two entries on two time frames. So let's just now back out to 4H. So right now, I'm just going to draw a demand zone underneath this Asia session. So let's identify our demand zone. Right here, we have a 4H wick rejection area. That's that. 4H wick rejection area. So there you have it. That's our 4H demand zone wick rejection area underneath the Asia session. And we have the same thing happening on our 1H time frame. Okay. So on both charts, we can clearly see the Asia session is right here. So during the London session, we have a phenomenon called a stop hunt. Price goes in the opposite direction of the trend, grabbing all the stops that are resting around the swing lows, and then price appreciates in value and goes to the upside. The minute the price comes into our 4H wick rejection area, okay, we had a signal to the upside. We had an engulfing candlestick right here. So this, if we didn't actually see the price, because so that in itself is a signal. We could have entered the price just like this, placing our stop loss around this level and aiming for, let's just say 7%, just like this. That is our 7%. Now, typically this can work, and a lot of the times price is just going to go to the upside and we are going to reach our take profit. However, there are times when we do get false signals. The price goes up and then dips just slightly lower, which causes us to lose our confidence and not believe that the trade is actually going to go in our direction. So what actually happened on 15M? Let's zoom in slightly. Here we got stopped out. Now at this point, when we get stopped out, a typical trader is going to feel, oh my God, this trade is not working out. I'm just going to stay out of the trade. I'm not enter at all. It's going to play on your mind. Your psychology is messed up. Anxiety levels rising, and so on and so forth. Price then gives us another entry around this level, another M15 entry. We could have placed our stop loss here or a little bit higher. Aim for 7%. Price reached our 7% right there. Okay. However, there were loads of fluctuations. Price went up. It started to retrace. At this point, we could have been thinking, oh my days, is the price going to take me out? And it went up again. Then we had a strong engulfing to the downside. At this point, we could have been nervous. We could have been thinking, I should have secured my profit right here, but no. And then now the price is going down. Should I stay or should I leave? So many things going through your mind, because the difference between here and here is quite big. This right here is 6% and this is 3%. So when the price comes here, you may be thinking, Am I doing the right things in the trade? Am I going to be stopped out? All this market volatility can actually reduce your confidence in your strategy. Okay, further increasing your anxiety levels, increasing your screen time. You have to be glued to the screens and so on and so forth. Eventually the price did pull back and it continued to go higher. Okay, but there was a lot of emotional turmoil happening around this section. Now we're going to do the same process but on a 1H time frame. Okay, so all that was on a 15M. Now we are going on to 1H time frame. The same zone, the same 4H demand zone. On 1H, we only have to look at the price once an hour. So this is the Asia box. Then we get a liquidity grab, which grabbed the swing lows that were resting below this level. This right here is a stop hunt. We had one candle, second candle, more entry for 2 hours, and then suddenly we get a full engulfing, a bullish full engulfing candlestick. At this point, all we need to do is place our stop loss right here, and we aim for how much? Let's aim for 5% because we are on a 5. Let's aim for 5% because we are on a 1H time frame. Let's aim for 5% because we are on a 1H time frame. 1H time frames usually have a larger stop loss, so you can't be expecting the same profit margins that you get on 15M. On 15M, you get tighter stop losses, but 15M is susceptible to giving you false signals. This section right here is the difference between the 15 minutes and 1H. On 15 minutes, we got a double stop hunt, and on 1H swallowed the whole volatility and the market noise, and it gave us a proper signal right here on 1H. And also, while the trade was going on 1H, how do we stay in the trade? It's very easy. Listen up closely. By the way, if you're finding this very valuable, click that like button, subscribe to this channel, share this video with people who are going to find this video very valuable. Let's proceed. So here we have 1H engulfing blue. We had a black bearish candle. However, this black bearish candle did not engulf the previous candle, so we stay put. Then we had another blue candle. We had another black candle which did not engulf the previous candle, so we stay put. We only come out when we are satisfied with our take profit, or when we get a bearish engulfing candlestick, and we didn't get that in this scenario. So we have a blue candle, blue candle, blue candle, another black candle. It didn't engulf the previous blue candle, so we stay put. And then we get blue candle followed by 2 blue candles. So at no point on 1H did we get any signal that the price was going to reverse and take us out. However, if you look at the same thing happening on 15M, we had a bearish engulfing here, bearish engulfing here, another engulfing here, another engulfing here, causing much anxiety and self-doubt in your ability to trade the forex markets. So which time frame is the best for you? I personally prefer the 1H time frame. The reason why is because 1H time frame gives me solid signals. Okay, the potential of being stopped out on a 1H time frame is drastically reduced, as you have seen in these examples that are before your eyes. I still like the 15-minute time frame. You can get bigger rewards because your stop loss is tighter. However, that being said, you do get stopped out more. You do get false signals more. So you have to exert much more mental energy and much more screen time in order to get 2, 3, 4% more on smaller time frames. So in terms of following the path of least resistance, I prefer the 1H because I can do more things in the day, because I look at the chart only once an hour. I know what I'm looking for, and I can find much more stronger signals. And even though I get less profit, if I take 2, 3 trades in a day that give me 5%, then that's a very fantastic result. So that being said, these are the differences between the 1H and 15-minute time frames. If you are looking for a forex mentor who is going to train you and take you from 0 to 100 in this forex game so that you can save yourself time, then all you need to do is click the link in the description section below. I'll see you guys in the next one. Take care.